Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. First, I'd like to say a Happy New Year to everyone. It's 2018 now, and we are starting a new year with a look at a potential Holy Grail trade setup that's in the very early stages of potentially unfolding on a Forex chart, the British pound US dollar. But as usual, first we have to look at our risk disclaimer and remind you there's a risk of loss in trading and investing, and remind you that losses can and will and do happen. I'll put that another way. All professional traders know and understand, but more importantly accept, that losses can and will and do happen. Also remind you that all trade decisions are your own sole responsibility. Right, let's have a look at this chart that I want to look at the moment. It's a 1 hourly chart of the British pound US dollar. And you can see here that we have a TS3, HG or Holy Grail trade setup in the process of unfolding. So first of all, what is a Holy Grail trade setup? Well, a Holy Grail trade setup is a potential wave 2 that is potentially going to be the start of a strong wave 3. So how do we look at this in respect to that analysis? Well, if I put the major pivots on, you can see that we have a high unfold here. This is the initial decline down, this is the initial correction up, and if I right mouse click and then do Elliott wave major, you can see this is unfolding in our wave 2 or B WPT. But because it's coming off a major high and it's the initial decline down and the initial wave initial correction back up, this is more than likely a wave 2. Why is this so important? Well, it's important because if I place the analysis on here, right mouse click over the red cell bar and do the analysis, after a wave 2, then we're likely to get a wave 3. Why is this good? Because a wave 3 is usually the strongest and longest in a completed 5-wave sequence, therefore represents the largest profit potential for the smallest initial risk. We're not saying that the market is going to get down here. All we're saying is that if it does, then the profit would be approximately 6.8 or almost 7 times greater than the initial risk. If the market turns around and then stops you out, the loss will be kept small because we use position sizing. In this case, risking less than 10%, less than 2% of a sample $20,000 account. So that's 2% of a sample $20,000 account. That would mean shorting 15 mini lots of this level. You can see the market now has just gone beyond the 100% initial risk level here. Let's have a look at the higher time frame chart. So for you guys who've been following MTPredictor for a while, will know that rather than just using MTPredictor as a mechanical system, we don't do that because we know the market goes in cycles. In other words, at least 50% of the time the market pattern is unclear, and therefore you shouldn't be doing any kind of analysis or trading anyway. So rather than just using our MTP trend indicator, which is red here, so obviously that indicates a large trend is down, we have a look to see whether we've got a clear higher time frame picture. So for this we go out to the 4-hourly chart. So for the higher time frame, we normally look to a time frame between 3 and 5 time frames higher. If you're using a daily chart, that would be going out to, say, the weekly chart. If you're, say, using a 3-minute chart, it would be going out to the 15-minute. But because we're looking at an hourly chart, it would be going out to the 4-hourly chart. So here you can see there was a prior pivot high here. Can you see that? There's the pivot high there. So if we right mouse click, we do decision point, this area would have been on the chart in advance. In other words, this area is a leading indicator. It would be here before the market even gets there. You can see if I take that one off and I place it off this DP low here, the next major support zone will be right the way down here. And obviously this has got a long way to go, but it's there in advance. But the point being is, up here, can you see how the market on this 4-hourly time frame went up to there and reversed at the level? It didn't go right through it. It didn't chop in and around it. It didn't give an unclear pattern. It stopped right at the level. In other words, it was a nice, clear, clean reversal. So now if we come down to the shorter time frame chart, let's have a look at what this looks like. So here you can see that there's our resistance. Can you see it? There's our 4-hourly resistance. So that means that's where we start our Elliott wave sequence. This is why I've developed my unique isolation approach to Elliott wave. In other words, we don't apply things 100% of the time because we know markets are random at least half the time. Therefore, trying to apply an Elliott wave account on a chart 100% of the time basically just doesn't work half the time. So here we actually start in the sequence here because the market has basically made a meaningful reversal at a higher time frame resistance, in other words at this higher time frame DP. As we've already seen, the initial decline down will be wave 1. The initial correction up, which subdivides into an ABC, there you can see it, would be into a wave 2. Then ideally we should now get a wave 3 decline now, and that's what we saw earlier in the video. So remember, we use correct position sizing to keep the loss small. If the market then turns around, the loss will be considered a 1R or 1 risk unit loss. If the British pound carries on down now, then this will be considered a 6.8 or nearly 7R profit. So this is why I like these particular trades, because the potential profits are large in relation to the initial risks. So I've purposely done this video now with this setup very early in its stages, and we can follow up in the days and perhaps a week or so to come to see how this particular trade setup unfolds and whether the pound does indeed carry on declining down into this target, or if it does go back and stop out. Again, if it stopped out, it would just be a 1 risk unit loss, but if it does carry on down, then the profit potential is much larger at almost 7 times the initial risks. So let's follow this over the next week or so and see how this particular trade setup unfolds. But I thought it would be good to start the year with a potential trade setup that's in the process of unfolding, so you can see exactly how we look at these early on in the particular trade setup.